Okay, 620. 620. Is it a magic number? Well, it can be, as longtime Gilmo members are probably well aware, but we've got a few newbies out there, and I've had a number of questions about 620 or the 620 method. So I wanted to review what it is and give you guys some insight into how I use it. But first, let's start with reviewing what it consists of. The 620 chart is basically a 5-minute candlestick chart that I use. It has some basic settings, and the first of which is a 6-period exponential moving average, which I color orange, and a 20-period exponential moving average, which I color blue. Now, if you set this up yourself, you can choose whatever colors you want, but I pretty much know what orange and blue means when I look at this chart. And then I apply the same thing to the MACD, which is set to similar settings. So the fast line is set to 6. The slow line is set to 20. The interval or the smoothing is set to 9. And then the last value is C for close. So it's, I guess, calculated off the last bar's close. Anyways, that's basically what it looks like. And you can also set it up, if you want to, you could set it up on stockcharts.com. Here's one right here. And I think stockcharts.com is free. You can get, I think you can get this almost real time where it's delayed just a few minutes, but I think mine is pretty much updating in real time. And you can see here's the SQQQ 620 chart, and here's the way I set it up. It's pretty simple. Period 5 minutes, range, fill the chart, bar 5, gap 3, extra bars 10, candlesticks is the type, size 700, color scheme default, up color is blue, down color is auto, which is going to be red. And the other stuff, solid candles, color volume, smooth lines, all this stuff you can figure out whether you like it or not. But you can see here on the overlays, I've got an exponential moving average right here of 20 and another one of 6, and I've got them colored blue and orange, as you can see. And then this is a little bit simpler than setting it up on eSignal. Down here you can see that I have the MACD set to 6, 20, 9. And the color is blue. Now the one thing that's different about this chart, and I'm not so much looking at colors on the MACD as I am the slow versus the fast. And when you look at a MACD, you can recognize very quickly which line is the fast line and which line is the slow line. The slow line is obviously going to be the smoother one. So in my eSignal chart, the slow one is blue, and the fast one is orange, and it's reversed here. And I'm not really quite sure how I set the colors here. That's just the way it came up when I set this down here to orange. But either way, I can see when I have a MACD cross, when the fast line crosses above the slow line, such as we had here towards the end of the day, and that occurred right there. So that's actually a long entry signal. So anyways, I'll get more into that in just a second. But the 620 chart originated with my Forex trading, believe it or not, and it started out as a 924. And I think I was using a MACD that was 1226 and something else, 1226.9C, I think is what it was. I'd have to go back and look at my old Forex trading platform. But there are times when I'd be in positions and I don't want to overtrade, and so I have to deal with my obsessive compulsive need to trade by messing around with a few $1,000s in the Forex markets. And I used to mess around with this chart and just have fun with it. And it probably saved me a lot of money, because at certain times over the last several years has probably kept me from doing stuff with stocks when I probably shouldn't. But that's how it all started. And then what I began to notice, I think it was around 2014, that I could use this chart to time entries on short sale rallies. And then as that progressed, I began to realize I could use it to time entries on long entries on the long side on an undercut and rally as it's turning, or where something's getting oversold and starting to reach a point of or a level of support, such as a moving average. So it basically became something I use as a tool to determine when I'm looking at an inflection point, either in a stock or the indexes. And I started using this about a year or so ago, maybe longer, with the UVXY, which worked pretty well. And also now I use it with the SDOW, which is the 3X ProShares Ultra Pro Short Dow ETF and the SQQQ. You can also use the SPXU. These are all, I think, 3X index ETFs, and I find that these work pretty well in terms of finding inflection points. So if we just look at the Dow, one of the things I'm always watching when I'm trying to figure out how I want to use this on any given day is what's going on with the indexes. So basically, when we were up here, we're getting a rebound rally off the 200-day line. I'm actually watching my chart very closely on the S-Dow for a reversal where I can enter on the long side of the S-Dow ETF, the inverse ETF. I do the same thing with the NASDAQ. So what we're seeing right now today is you have a decline in volume and you're pulling into the 20-day moving, or I'm sorry, the 200-day moving average. That's the red line here. And so it appears to me like the Dow's trying to hold support here. Now, it busts the 200-day line, all hell may break loose. But the other thing to look at here is that you do have this sort of descending trend line here, and it seems to be finding resistance lower and lower in the pattern. And volume is drying up, so I don't know if this means we're going to get a launch up to the 50-day line. We have Caterpillar earnings tomorrow morning, and maybe that means we'll get some kind of move, and maybe I could look at buying the S-Dow at that point on an inflection point, possibly at the 50-day moving average. But let's just look at what happened today, because today was kind of a crazy day. If we look at the Dow on a 5-minute chart, we can see that you came in this morning, and for me, the opening is at 6:30, so that's right here, just to the left of this blue data window. And you can see right away we broke to the downside. So you got a quick signal right at the opening on the MACD cross here. And I will actually, if I see that on the Dow and it coincides with the turn on the S-Dow, then I'll go long. But as you can see, though, it was a choppy day because then you rallied sharply and then you broke sharply. And then you spent the rest of the day kind of loping upward, and then at the end of the day, we rolled over again. So there wasn't any real clean break to play in the S-Dow. And if you were trying to buy it and sell it and buy it and sell it based on what you're seeing on the 620 chart, you would have been flipping in and out probably. I mean, I know I was, and I was trading around some core positions. But I'll just give you some idea about how I would handle it on a day like this. So let's just look at the S-Dow, S-T-O-W, as an example. And we can see that right at the opening, in fact, before the market opened at 5:45 my time in the morning, and yeah, I'm up at that time. I'm actually up about an hour before that, but I'm watching this, and then you get a cross here early in the morning when it's trading in the pre-open. So sometimes when I see this in the morning, I may take a position, not a huge one. And then by the time we open up, I see some sort of confirmation. Like right after the open, you see the 6-period line here cross the 20-period. The MACD is already holding above. The fast line is holding above the slow line. So that's all in buy mode. And then I might double it up right here, and I get a nice move. And then I'm watching this. Now, what I do is if my average cost in here, let's say I bought here, which would have been right around 1570, I think it was, and then in here, which would have been closer to 1590. My average is somewhere in the land of 1580. So a lot of times what I'll do is I'll just hang with it until I either get really close to my entry price, or I see an obvious exit signal on the 620. But I'll try to hang with it. And a lot of times I'll just use a 10-cent stop because I'm not playing for nickels and dimes here. What I'm playing for is a day where you see the Dow open up maybe $100 or so, and then breaks to the downside like I did a couple of Wednesdays ago when we were up like 150 early in the morning, and then we broke down 831 points on the Dow by the close. That's the sort of thing you're looking for, because once you get into a bear trend, you'll get this sort of cascading action in the indexes, and that's really what you're looking for. So if we look at this, for example, this is a good day right here, because you opened here, you gapped down, then you rallied into positive territory, and then you rolled over. So if you caught that on the 620 chart using the S-Dow ETF as your vehicle, your trading vehicle, then you could have come in on that and captured this move. So the other thing going on was the day before, same sort of thing happened. We opened roughly flat, and there was a signal earlier in the day, and then boom, we went down huge. And that's what I'm looking to catch, okay? These little weird wiggles in here is not really what I'm looking for. So let's just use a practical example of what went on today, okay? So I'm coming in here. We got a signal before the opening at 1570 right here. So in here, and then we get a confirmation here, which is here. and I'll use the high of this bar just to keep things real. And you could say your average then becomes somewhere about 1582, 1583. Now the interesting thing is you never got below that all day long in the morning, so I was able to hang with that, and you get this first move. Now if you really want to play this fast, you could try and trade out of it here, right here, when the MACD crosses back to the downside. But in most cases, you're going to be getting out. You'll probably be getting out here, and you could do that. And then by the time it turns, though, you're probably like a nickel below where you came out. So a lot of times I find this doesn't really get me what I'm looking for, and I got to let it hang a little bit more. So, but I guess someone using Lightning trading system could trade this that way. But the other thing also is that when you do get this cross, you don't get a moving average cross. In fact, the moving average cross is here, and just as it's dropping below, the 6 period is dropping below the 20 period, you notice the MACD is starting to cross to the upside. So that's actually a bullish signal for the S-Dow. And in the face of this cross, I'm more or less looking at this as sort of a pullback meetup between the lines, and that's what you basically had, because you put in this low and then you retest it. Then you push higher and you confirm again, so you're holding up all day, and then finally, all morning rather, and then you finally cross up here. So at that point, you could possibly take a profit, and 1580 to 1620 is not too bad. I mean, if you're running 30, 40,000 shares of this thing, it's a little bit of lunch money, but it's not, again, not really what I'm looking for. But if I have to take it, I'll take it. Sometimes I will back away and trade around a core position when I see that. So you get the cross, and then you could take a profit because you're kind of extended. Other things to watch for: how far above the 20 period does the 6 period get? And that can tell you sometimes when you're getting a little bit extended and you have to be alert to a pullback. And if you saw a MACD cross, you could be lightning fast and bail out, hopefully close to the peak, and then try and re-enter if that's how you want to handle it. So today, anyways, that turned out to be a reasonable sell signal. And you could kind of get a feeling that the algos are just pushing the market back and forth. There's no real trend. We're already deep down in our correction, and you're sitting along the 200-day line, so you could go either way. So you kind of have to be able to dance with it and move back and forth while it's in play. So finally, we get a cross on the 6 period. Moving average drops below the 20 period. So at that point, I'm thinking, okay, I'm out of here, and I'm not messing with it anymore until I see something different later in the day, if at all. And in that case, we did get this right at the close. So I'm actually not long the S-Dow, but I switched over to the SQQQ. And there's no real seriously deep rationale for that, because what I think is going on right now is SQQQ obviously is the NASDAQ 100. It's not the NASDAQ Composite, so it's an inverse ETF for the NASDAQ 100, which is the 100 largest stocks on the NASDAQ. Now, that's holding along the 200-day line, but it's got the same thing going on as a Dow. So to me, it's sort of 6 of one and half a dozen of another. So you're in these little downtrend, descending sort of triangle, and a lot of times this will result in a breakout to the downside. And what I'm really looking for is a breach of the 200-day line by both the NASDAQ and the Dow. And notice that the two indexes that are holding above the 200-day moving average are the largest, most concentrated indexes in terms of the number of names. So 30 names on the Dow, 100 names on the NASDAQ 100, and those are actually acting better than everything else. So it tells you how narrow the market has become in terms of what's acting really poorly and what's trying to hang in there. So the big money is still hanging with some of these names, but the question becomes, when do they all cut loose and let these things go? So I don't know. We'll see what happens. But in the meantime, I think the 620 chart and the 620 method, as I practice it, will keep me on the right side of things unless we get a massive gap down at the opening. Then if I'm not long something overnight, I will not participate. And I don't have a problem. Right now I'm going to hold a position in the SQQQ, about a 35% position overnight. I don't see that as a huge amount of risk unless we gap up a couple of 100 points on the NASDAQ, which is not going to kill me because I've got a pretty good cushion from shorting over the last 3 weeks because we nailed the top of the market. And I hope you guys were all participating with that. But that was a peak in the Dow. It came right after the U.S. and the Canada settled their trade differences, allegedly. And then everything came apart, and we had this sharp break. And that was basically an orgasmic, for lack of a better term, moment in short selling during 2018, similar to what we saw earlier in the year in early February. So a lot of things blew apart. You could have thrown darts at just about anything that had a high PE or that was tech, or it had a big PE expansion like Caterpillar, which also blew apart at that point. And there's so many stocks blew apart, and they're still blown apart, and they haven't really rallied. So it leads me to believe that we stand a good chance of just breaking down through the 200-day moving average. And I would look at the Dow and the NDX as my short selling vehicles on the index side, if I want to play it that way. And I think if you look at all of the NASDAQ 100 stocks, a lot of tech, a lot of things that are breaking down, and these are not going to be, they're not going to have the right volume. But I mean, you just look at names like Nvidia and Netflix and Apple, which to me is stalling and looks like it may falter here. Google, Microsoft, Qualcomm, Tesla, Micron, which is also, it trades on the NYSE with a 2-letter symbol, but it's on the NASDAQ 100 index. So all of these names are weak, and so if you want to come after the group, you just buy the SQQQ. Now, let's look at how this acted today. And you'll actually see that the S-Dow is a little bit better to trade because this basically just chopped back and forth. And you saw this huge move in the NASDAQ early in the day where it had gapped up. And then once we opened up, this is 6:30. Well, 6:30 it ran up and it was gapping up earlier in pre-open trade. But you got to cross almost exactly at the you know what? Wait a second here. Let me go over here. Let's figure this out. Here we go. This is 6:30 right here. So you basically broke down immediately. Then you rallied back up to positive territory, and then you broke down again, and then you just chopped around for the rest of the day. So I actually never played this one during the day. I was playing the S-Dow, and then towards the end of the day I shifted to the SQQQ. We'll see if that turns out to be a smart move or not. My thinking is if CAT comes out with strong earnings in the morning, it's probably going to be the Dow that rallies the most. So if I'm going to hold anything overnight, I'm going to hold the SKUs. Now, that's my thinking. That doesn't mean that I'm going to be rewarded for that particular train of thought, but that's just how I'm going to handle it based on a little bit of cushion I got today and the pretty good sized cushion I have from shorting over the last 3 weeks. So the SQQQ, you can see right at the opening you got a MACD cross, and at the same time it coincided with the 2 moving average, or the 6 period crossing over the 20 period moving average, and that lasted for a little while, and then that rolled over very fast. So here's a MACD cross, and that occurs right around here near the high, so you could have been bailing on that, and this is very sharp. And then once it broke down again, I actually came in here and played this right here, and that was the only time during the day. But you had another cross here along the lows, so come back into it again and catch this move. But, I mean, what are you really catching? You come in at 12.95, and you run up to 13.30 at the peak here. And so you get, 35 cents, which I guess is not too bad. It's like 3.5%, I guess. So if you're running a 40, 50, 60% position like I might be, sometimes even 100% position, I'll catch that. But I don't like to do that unless I think I'm at a very good inflection point. I didn't feel like today we were in that sort of situation, so I never took a very heavy position. And you'll notice, throughout the day it just chops around. Then finally, at the end of the day, we get one last signal. And sometimes if I see a signal coming in the last half hour or so, I'll take it, and then I'll decide what I want to do either in the after hours or the next morning, depending on how things open up. But I figure my risk is low. It's actually not a very big position, at least not for me, and also based on the profit cushion I have from being short a lot of stuff over the last 3 weeks. So we'll see what happens. Now, just as a quick aside, I want to talk about a couple of ways to use it with shorting stocks. So today, for example, let me see if I can, I'm just going to shift this one over to a different style template. And we're going to look at Fortinet real quick. So you can see Fortinet on a daily chart
CAT
is rallying up into the confluence of the 50-minute and the 20-day exponential. So that's moving into a short sale point. Now notice today it closed up, so it never really rolled over. And that's because the NASDAQ never really rolled over. The NASDAQ closed up 19.6, the NASDAQ 100 up 33.98. So tech was holding up today, but that's today. We'll see what happens tomorrow. But you can see that what happened is right at the opening, at just after 7 o'clock, so it's about, let's see, that's 7:25, so about an hour after the opening my time. Market opens at 6:30 a.m. here out on the West Coast. You had a sharp move to the upside. So obviously you're not trying to short that. You're just watching this. And then I noticed that as we got up into the 83, above 83, you start to flatten out. And notice you get this negative, as the stock's making marginal highs intraday, you're making marginal lows, lower lows on the MACD. So at that point, I thought coming in short along here is doable, and that's a good try. And again, you had another MACD cross up here, so you could have added a little bit, but it never really went anywhere. We came in a little bit, closed at 82.94. So we'll check this one out in the morning. Now, the one that was very successful, and remember in last night's or yesterday's report, or the weekend report, I talked about most stocks not being in shortable positions, and I went over just a few of them. Light was one of them, and of course, it's a little bit different situation because it's above the 50-day. But like I said, you're seeing it stalling off the highs, and the 50-day moving average can become a trigger for a short sale. So you could have also triggered on that using the 620, and I'll show you what I'm talking about. Because you're coming up here, right at the open, you're already gapped up. And at the open, you're already opening up at about a little above 63.10, 63.12. So I think that was up. Let me check this. Yeah, that was up maybe a couple of bucks at that point. So right off the bat, it's moving higher. So you'd be watching this, and you get a cross here, another cross here, and then you start to see it cascading down, and at this point you could be short a small position. As it starts to break, you get the cross here, you could be shorting some more, but you'd want to be moving very quickly on this. Now if you set your trigger, set an alert at the 50-day line, that would have been at, let's look at our data window here, that would have been at 61.72. So you would have been triggered on a short sale at that point, which would have been a fair bit lower than using the 620. So this actually worked pretty well, but my feeling on this one is that it's kind of edging up. It seems slightly wedgy. You had downside volume picking up on Friday. You're up along these highs, and it seems to me like that's not looking like it's going to hold up. And sure enough, it did not. So the other one I was trying to work on today that really didn't do anything for me was PayPal. I mean, Light was good. Fortinet, nothing. PayPal, nothing. But you know what? That's what happens sometimes. And you may have to be persistent and come back and look at this again tomorrow. So, you had a cross here right after, this is like right after the opening, just maybe 45 minutes or so. And then you have this cross the stock rally. So you're obviously not going to mess with this up here. You're just watching it. You cross here, and that comes off the peak. And I remember actually shorting it in here and thinking, oh boy, I'm going to make some money. And it starts to roll over, and then it just comes back. So I covered, just got out of the way, and then it crosses again. So come back after it again, and it comes down a little bit, and then it rolls back against me real quick. So this one just kind of, flipping you around, or as I like to say, flipping you off as it holds up. But I think you need to watch this one because you basically have, oh, that's a nice mess. On the daily chart, you have this a little bit of what I call like a tweezer's top. It's a candlestick term, but you can see it. Basically, you have two ranges with the same high. Light had the similar type of setup here. First one's the heavy volume. The second one is lighter, much lighter volume. So you had the gap up after earnings, and this looks like resistance up to the 50-day moving average. So we'll check this one out tomorrow to see if it turns into a short. Some other things that I thought were coming into position you might want to watch tomorrow. Trinity, this came right up into the 50-day moving average. NTR, Nutrient, I told you guys I thought the ferts or fertilizers were overvalued, and crazy PEs and PE expansions, and this one had already broken down, so you get the rally yesterday into the 50-day line, or actually Friday into the 50-day line. Today you briefly rallied into the 20-day line, so you could have come after it there because you're only about 34 cents higher on the 50-day line, which is less than 1%. So you could have come in short after that and it broke down. But that was another one that broke. But there are very few things right now in shortable position. I don't know if Zebra is. It looks like it could be. It's right at the 59 and it stalled out. So you could test that one out and see if it works. I didn't really play with that one today. But anyways, you got Visa. I think MasterCard and Visa come out with earnings later this week. I think Wednesday possibly or Thursday. You might want to check that, but they're not really in any position. And then we'll see what CAT does tomorrow. If it gaps up in the morning, and you look at this pattern, this thing's so damn ugly, and it triggered as a short here. Remember when I was talking about it? Right here, and then it broke the 200-day line. That triggered again, so boom, it's basically been straight down from there. And we'll see if this is so ugly and undercutting this low at this point. There's the low right here. That by undercutting this low, it means we're going to get a rally on the earnings tomorrow, but we'll see what happens. Anyways, that's how the 620 works. If you guys have any further questions, you can either bring them to the blog page where I will answer questions. The blog page is now set up so that when anybody makes a comment on the blog page, I get an email so I can jump on real quick and answer your questions. And that is a place where we're going to open it up to people being able to ask specific questions on their trades or individual stocks, because I can then answer back in a group format, which is allowed by the SEC. We don't give personal investment advice, but I've been wanting to do more personal coaching, but in a group format, I think it's more useful, so that's where we're going to do it. So you got a question for me, send it to the blog on the comments. You can just pick the latest blog post and comment on that one with your question, or you can email me. I personally prefer the blog page because I'll get it a lot faster, okay? Anyways, that's all I've got for now, you guys. I hope this was helpful. If it was, let me know. If it wasn't, let me know how I could better explain things. All right, take care.